Well, another thing that was a big boo-boo, really big boo-boo, was Target's earnings, down 22% pre-market. This comes a day after Walmart was down 11%, which was the biggest drop in Walmart since 1987. I mean, most stocks have been down 30, 40, 50%, some 20% in a day, but Walmart and Target are these traditional retailers. You don't expect them to be down, but they are down. So the question is to both of you, is inflation hurting costs to the point that traditional retailers just can't make a profit because they have to charge so much more for their products? Justin, your thoughts?
Yeah, I think it's interesting that these companies are traditionally consumer defensive. And it's because in the last 50 years, we haven't had an inflation, I guess, driven problem. It's always been like crashes for certain demand reasons or structural reasons. And so, I think the concern of why they're down so much is because the concern that their costs of labor and their costs from suppliers is going up too fast, and they can't push up pricing or volume quickly enough. So that means their profits are getting squeezed, and their profit margins are thin as it is. It's not like Google that every single dollar flows to the bottom line, or every marginal dollar. So I think that you really have to. This is shaking my my confidence of what companies can pass on price and what can't.
Tom, do you think these guys can recover if inflation stays normal, or are there stocks in the gutter?
Well, look, the entire sector, discretionary income is in the toilet. If you look at Shopify, Etsy, even Amazon is not doing so well, right?
That's the point. Yep.
Target. So discretionary is a big problem. It's very different than a Coca-Cola or stuff like Warren. That's why Warren likes these stocks, because it's almost involuntary spending. You have to buy those things, right? So discretionary spending in times of crisis obviously takes a hit. It's like macroeconomics 101. You know what I mean? I need to explain this to you, right? So as Justin pointed out earlier, usually the stock market is so efficient at pricing in upcoming events. It's a leading and not a lagging indicator of what's about to happen in the main market. So seeing this level of punishment, I mean, this is not the first time we've seen it in this earnings season, right? We've seen earnings not being hit, and then like, wow, you saw what happened with Palantir, just one example, right? Target, there's so many more examples. Like the level of punishment these companies are getting for not hitting earnings suggests to me that we're actually headed to a very precarious environment where stock picking becomes really a very dangerous game. However, those who will pick correctly might be able to buy some successful businesses at the bottom, which is really exciting.
Yeah. Do you think that Walmart and Target are discretionary? Because they've always, or since I've been in the industry, they've always been like defensive. I will say, in order to kind of boost their growth over the past decade, they've expanded their SKU count, right? Like they've gotten more into, there's more toys, there's more electronics, there's more whatever. But traditionally, like Dollar General has been thought of something that's it's basically the smaller format Walmart for the local store that's more too rural for a Walmart or Target big box format that is there for food and like little goods. But what is safe if your labor costs are going up really quickly and people aren't spending as much, or their basket size is shrinking? That's the concern.
You mentioned earlier about discretionary spending. I'm not really sure if I would say that they're hybrid. Probably would be the best answer. There's definitely, but I don't think people like in Target. It's not like groceries. Like Walmart and Target are a little bit different in that respect.
They have some really groceries, by the way.
Yeah, but their main business isn't like involuntary spending, to be honest. And I think the thing with the Target. We don't talk about it a lot because we focus on tech, at least me, myself, and Amit. I just counted 3 people.
Wow.
That's interesting. Me, myself, and Irene. Remember that movie? Yeah. So basically, it is a market indicator. So this is, as I mentioned earlier, this might be the canary in the coal mine sort of thing, where we're seeing a big market staples kind of business taking a huge punishment for what seems to be a little bit underperforming earnings. So it's another sign that we're headed for recession, I think.
Quick hot take. I've thought of this for a couple of years. I always thought a tech company should buy a retailer. So imagine Facebook buying Target and then just competing with Amazon.
Already happened. Amazon bought Whole Foods.
Yeah, but I'm saying from a different side. I mean, if Facebook bought Target and they could just sell products, I mean, that's a whole new business line for Facebook. For example, I mean, if Target has, I don't know, let's say 10,000 locations and Facebook comes out with a headset.
Oh, okay. Facebook still is bigger than Walmart in terms of like size.
Yeah,
Facebook is 500 billion, I'm sorry. And Walmart is like 410 billion. So it'd have to be sort of a merger of equals. But yeah.
Bro, Waltons will never sell this business ever. It's a family business. It's like Ford.
In Arkansas. Can you imagine Mr. Robot going into Arkansas? Like, I will buy your business. Like, get out of here.
Justin got jokes.